Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Jay Conner, the Private Money Authority. Anthony, what was a takeaway or two that you had?
I tell you, the initial takeaway from the beginning was his passion.
Dude, he had some energy.
I mean, you can just tell he really is passionate and loves what he does. And I would say when we had him on or when we booked him at Private Money, I incorrectly assumed it was hard money. Right. And, the saying is they call it hard money because it's hard to get and it's hard to pay back. Right. But this private money is very different because with hard money, you're typically paying a higher interest rate and you're paying points. And his plan is very unique where he sets the terms.
Mm-hmm.
And instead of going around and asking money or trying to ask for the money, he just kind of teaches people that being a private lender has a lot of advantages. And then he focuses on the advantages of being a private lender. Then if they're interested, he's like, well, then when I get a deal, I'll let you know. So I thought that was pretty cool. And also I thought was interesting, the way he structured these deals is it's a 2-year note. Oftentimes with hard money, it's going to be, and it's with no points.
Mm-hmm.
With hard money, typically there's points, and that's typically for a 6-month period of time. And the problem can be is if you can't close or sell that or finish that rehab in 6 months, you either have to extend it or you're going to be in a bind. But here, that 2-year window gives you that flexibility when things don't work out as planned. So I enjoyed it. What were some takeaways you had, Cam?
Yeah, my takeaway that was really in his origination story when he talked about banks and being careful of doing business with banks. And he talked about how, he was in a really tough spot because the banks decided to cut doing business with him and cancel his lines of credit, and was in a tough spot and then had to go find different options and different opportunities. And I think that's the origination story of a lot of our clients, right? Is out there as your business owner, right? Investors, you have this love-hate relationship with banks. And so I think that really drove home the point of be careful with banks, right? Doing business with them. And so, guys, I hope you enjoyed this interview. But Jay Conner, a proven real estate investor known as a Private Money Authority, Jay uses his $8 million in private money almost exclusively to buy and sell properties with profits nearing $82,000 per deal. Jay walks his talk and averages 3 deals a month in his small 40,000 population area of Morehead City, North Carolina. Jay has coached over 2,000 real estate investors since 2011, teaching them how to raise private money. Hope you guys enjoy this episode.
Take care.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today we are joined by the Private Money Authority, Jay Conner. Jay, thanks for joining us.
Oh, my lands, Cameron and Anthony, I'm so excited to be here with you because we get to talk about my favorite subject, which is private money. Why is it my favorite subject? Because it's made more of an impact in my real estate investing business than any other thing I've ever done. Thank you for having me here. I can't wait.
All right, Jay, you're setting the tone, man. We're going to have a good time.
I like it. I'm excited too. Jay, start us off here, man. Tell us a little bit about, maybe tell us what private money is briefly, and then tell us a little bit about how you got into it. And then we'll dive into the meat today.
Sure. Well, I'm glad you asked. First of all, we want to make sure that we're all on the same page, knowing what we mean about private money, at least in this context. So when we're talking about private money or private lenders, we're not talking about hard money lenders. Now, bear in mind, I don't have anything against hard money lenders. I've got great friends that have got hard money brokerages. I say establish as many relationships with people as you can. But in this context of private money, we're talking about doing business, borrowing money from individuals, people just like you and me, plain old people that have got investment capital and or retirement funds that they're not happy getting a return on. And so we do business directly with them. They loan us money from either their investment capital, they loan us money from retirement funds, and there's no middle person involved. It's a simple one-on-one transaction between you, the borrower, the real estate investor, entrepreneur, and the private lender. My wife, Carol Joy, and I here in Eastern North Carolina, we've got 47 private lenders. So what does that mean? There are 47 individuals, human beings, that are investing in our deals. They each have their own promissory note, deeds of trust, and mortgage on each property. So that, in a nutshell, is a private lender. Now, you asked me, Cameron, after describing that, to share how in the world my background is and how I got into private money, right?
Yeah.
All right. Well, Carol Joy and I, we've been here in Eastern North Carolina investing in single family houses. Now, we've done commercial as well. We've done a shopping center from the ground up, but our primary focus has been with single family houses. Our total target market here is only 40,000 people. 40,000 people. The point of that is you don't have to be in a big market to make significant income. Now, we do 2 to 3 deals a month. So that's not a high volume, 2 to 3 deals a month, but we stay in all of our deals. I've never wholesaled a deal in my life. I ain't got nobody to wholesale it to in a population of 40,000. But anyway, I've stayed in all my deals. Our average profit right now is $82,000 profit average per house. I don't tell you that to brag. Again, I tell you, if you know how to find the deals, of course, we're going to talk about funding them here on this show, then you can make those kind of returns. So we've been doing this full time here in this market since 2003. 2003, we've been full time. We've rehabbed a little over 500 houses. Well, here's the deal and how I'm qualified to talk about private money. The first 6 years of this business that we were in it, I did it all the wrong way and went about it the wrong way. From 2003 to 2009, the first 6 years, I relied on the local bank to fund my deals, my houses. That's all I knew to do. I'd never heard about private money. I'd never heard about hard money. I'd never heard about self-directed IRAs. I thought you just went to the local bank and, they funded your deal. Well, I remember it like it was yesterday, Anthony and Cameron. You may find it hard to believe. We still actually have handsets with cords attached to them here in North Carolina. But I was sitting here at my desk in January of 2009. I called up my banker, and my banker, Steve, he had funded many, many deals over the years. I called up my banker about 2 deals I had under contract to purchase, and I learned like that over the phone that they'd shut my lines of credit down. I said, Steve, what do you mean you've shut down my line of credit? I've made all my payments on time, got an 800 credit score. Why are you shutting my line of credit down? He said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but now you just gave me a global financial crisis. I got these 2 houses that I can't fund. And so anyway, I put the receiver of the handset on the phone. I sat here for a second. And I asked myself a very important question. And that question was, who can help me with my problem? By the way, these people running around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem, right? So I asked, who can help me? Well, I immediately thought of my friend Jeff Blankenship in Greensboro, North Carolina. And I called him up and I told him what had happened. He said, welcome to the club. I said, what club? He said, the club of being shut down from the bank. They shut me down last week. I said, well, how are you funding your deals? And Cameron and Anthony, right there and then, Jeff answered my question. He says, well, have you ever heard about private money? I said, no. He said, have you ever heard about self-directed IRAs? I said, no. He says, well, that's the way for us to go. So I learned about private money, how to do business with individuals right away. And I put my own private lending program together. What do I mean by that? My program that I was going to offer individuals in my own network that how they can make high rates of returns safely and securely. So in that first 90 days of being cut off from the bank and learning about private money, I was able to raise $2,150,000 in those 90 days for funding. My banker actually did me a favor by cutting me off. So I was forced into finding a better and quicker way to fund my deals. So that's, I mean, that's the long answer to your short question. And your short question is, how did I get into private money? Well, I wasn't forced into it. I had a choice. I could have quit, put my tail between my legs and gone home. But that's one characteristic. If you want to be in real estate investing, you for sure want to be resilient. So look for a better and quicker way. And truthfully, that is where it all started. Since that time, I've never missed out on a deal for not having the funding. And I tell you, one big thing I had to learn about private money up front, and I'll turn it back over to you, Cameron and Anthony. One thing I had to learn is the difference between borrowing private money and going to the local bank is, in this world, we do not ask for money. They say, Jay, how do you have $8.5 million of private money to fund your real estate deals and you don't ask? Here's the secret sauce right here. And the secret sauce is you put on your teacher hat, which says private money teacher. You put on your teacher hat and you teach people that how they can earn these high rates of return safely and securely. I didn't have we don't have one of our private lenders right now, of our 47 private lenders, that ever heard of private money or private lending. The traditional way to borrow money is you go to the bank, you get on your hands and knees and put your hands underneath your chin. You say, please fund my deal. And you got to apply and you got to have a credit score. It's the totally opposite of that in this world. You see, we don't ask for mortgages, we offer mortgages. So there's more nuances to that. But that's how I got into this. And as you can tell, I'm still excited about it.
Yeah.
Man, I love that, Jay. There's a lot there. Let's start to unpack this. One of the things that I heard you say is, correct me if I'm wrong, is that kind of your first go around, you raised over $2 million. Is that right?
In 90 days. And
Wow.
the point of that is, I didn't go around chasing, begging, selling, persuading, trying to talk anybody into loaning me money. We lead with, the reason this works is we lead with education. None of my 47 private lenders ever heard of private money until I shared it with them. And so I didn't run around town trying to find people. I just started sharing it. And of course, there's nuances to that as to how you start sharing and how do you start a conversation with somebody without ever feeling like you're having to sell anybody on anything.
So that was going to be my question is when you're out there talking to somebody, what makes what makes it attractive? What are you telling them? Hey, I can get you a higher rate of return, or what's the message that you're telling someone?
Yeah. So here's part of the secret sauce as to how to get your deals funded without ever asking for money. Here's the secret. Desperation has got a smell to it. And one of the worst times and most stressful times you can have in trying to raise private money is when you need it for a deal. That's stress. I mean, hey, look, these gurus going around town, I know you all have heard it. I just want to throw up. They'll say, oh, just get the deal under contract. The money will show up. I know you all heard that. I know you heard
Absolutely.
it. Just get the deal under contract. The money will show up. And I want to say, where? Where is the money going to show up? Is it just going to like rain out of a cloud? Now, if you're wholesaling and you got a buyer's list of real estate investors that can take your deal down, that's a different story. But I'm talking about making offers on deals that you plan on staying in the deal. That's why I say the money comes first. So we separate, back to your question, how do we do this? We separate the activities. This is a writer downer right here. We separate the conversations of teaching, there's the key word, teaching our program, the private lending program, to potential private lenders that might be interested in getting higher rates of return safely and securely. And then the other conversation that we separate from that one, once they say, hey, I love this program, I got a couple $100,000 sitting over there in a 401k that ain't doing me nothing. Well, then I'll introduce them to the self-directed IRA company that I recommend. So once they're ready to go, they've told me how much money they want to invest, how much they want me to put to work. I say, great. Now, this is key. I say, great. I'll go put your money to work for you just as soon as possible. I'll let you know when we've got a deal for you to fund. So there's the separation. You got the teaching, they're in, here's how much I got. Put this money to work for me. And by the way, if they're using retirement funds and they never heard of self-directed IRAs and you told them about it and they move their funds over to a self-directed IRA account or a company, they're not making any money until you put their money to work. So, I mean, they're like sitting by the phone call. So here's the second part of it. So now you got a private lender. So Cameron, let's say you're one of my new private lenders. Let's say you love my program and you've got $150,000 that you want to invest and you want me to put to work. So I say, great, Cameron, I'll call you just as soon as possible, as soon as I've got a deal for you to fund. So great. So let's say a week goes by, 2 weeks goes by, and I call you up, Cameron. So I pick up my handy dandy handset here with a cord attached to the telephone, and I get you on the phone, and I say, Cameron, and here, by the way, here's the exact script. So if anybody's listening and you're into scripts that attract money for you without you chasing money, here's the script. Hey, Cameron, this is Jay. I've got great news for you, Cameron. I can now put your money to work. I've got a house in Newport with an after repaired value of $200,000, and the funding required for the deal is $150,000. Notice, side note, how that matches exactly what Cameron's got, because he told me that's what he's got. And I'm not borrowing more than 75% of the after repaired value. Cameron already knows that. I've already taught him the program. He's waiting for the phone call. Back to the script. Ring, ring, ring. Hey, Cameron, this is Jay. I got some great news for you. This is why we call it the great news phone call. I got some great news for you. I can now put your money to work. I've got a house in Newport with an after repaired value of $200,000, and the funding required is $150,000. Closing is going to be next Friday, so you'll need to have your funds wired to my real estate attorney by next Thursday. I'm going to have my real estate attorney email you the wiring instructions. End of conversation, except for chit chat. You notice I didn't ask Cameron if he wanted to do the deal. Of course he wants to do the deal, because I'm not bringing a deal for Cameron that doesn't fit the program, the parameters of, hit the lending, matching the deal. I'm not bringing a deal that does not match that. And again, particularly if Cameron has moved retirement funds from an existing retirement account over to the self-directed IRA company that I recommend, he ain't earning any money until I give the good news phone call. And by the way, the most stupid question I could ask Cameron in that example is, do you want to fund the deal? Well, of course he wants to fund the deal. He's been sitting by the telephone waiting for the phone call. So that's why there's no chasing, begging, selling, persuading, or any of that stuff. You're offering a service. It's a win-win for everybody. Do not have a conversation about what you can offer private lenders and a deal that you have to fund. You put those two things together in the same conversation, you already sound desperate without even trying to. Now, one thing you did ask me, Cameron, and I'll toss it back to you guys, is how do you start a conversation? How do you even lead, into that? Well, it depends on where you are. So, like tonight, Carol Joy and I are scheduled to go to dinner with my dad and his wife and their kids. And we're going to be to dinner tonight. And it's such a big crowd. There could be a chance that I'll be talking to one of the brothers-in-law or sisters-in-law at dinner tonight that I haven't met or been around long or whatever. And I may just start up a conversation and, we'll chit about this and chat about that. And then I may say, I got something that you may find interesting. Did you know there's a way people can earn unlimited money per year tax-free? Well, in a casual conversation, you just got somebody's attention.
Yeah, absolutely.
Maybe Anthony and Cameron are interested about this too. I don't know, but how can you earn unlimited money per year tax-free? Of course, they're going to say no, right? And by the way, we're having dinner. This is casual out and about with people that you're connected with. They say no. I say, well, my next question would be, well, have you ever heard of self-directed IRAs? there's a 99.9% chance they're going to say no to that because most people haven't. And so now that leads into a conversation about, well, you may find it interesting to know that I put lucrative real estate investing deals together and I pay my investors insane high rates of return. So the reason I asked that question was, here's the answer to how you can earn tax-free or tax-deferred income unlimited per year. And then I go into a little bit of a conversation about, how people can take existing retirement funds, move them over to the self-directed IRA company and be a totally passive investor. Another way I like to start conversations, this is back to the answer, depending on where you are. I'm talking along, I'm having a conversation. I'd say, well, by the way, are you investing in anything these days? And I promise you, if they are, they're not happy. In this market, if they're investing in anything, they are not happy. So then I'll say, well, I put lucrative real estate deals together for my investors and I'm paying them insane high rates of return. And so I shut up. If they sound interested, then we're talking about that. Another example of what you do, depending on where you are, I'm a big promoter of private lender luncheons or private lender events. And that's where, in fact, I've got a whole session and module that I teach on how to have a successful private lender luncheon. In fact, I got a whole chapter in it in my book on how to have a successful private lender luncheon. And so now you've got a group of people. So, I mean, I've raised as much as $969,000 at one 90-minute luncheon where you buy people lunch. And what do you do at that luncheon? Well, you teach them the private lending program, what interest rates you're going to pay, maximum loan to value, how they're protected, they're named as a mortgagee on the insurance policy, blah, 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 blah. And so it takes about 15 minutes just to walk through the simple program. And then there at that luncheon, they write down on a feedback sheet if they're interested, and if they are, here's how much they got to work with, or they'd like to have a one-on-one conversation with you. Guess which one they're going to choose. They're going to want to sit down with you and, have a one-on-one. So that's how you start conversations. And here's the thing. Anytime I have felt in the past that I was leaning in or pushing or starting to sell, I back off. This is all about attracting. This is all about making a difference in other people's lives. Carol Jo and I have gotten thank you handwritten notes, hugs, in-person thank yous from our elderly private lenders where they have told us that we have changed their retirement years by being able to give them a program to where they can get a reliable, predictable rate of return. And, for the private lenders, it's beautiful. It's just like them putting money in a bank and they know exactly what return they're going to get on
it. Awesome. Jay, tell us about the deals, right? One of the other things I wrote down was $82,000 per deal. Is that right? Tell us a little bit about that.
Yeah. Well, one reason it's so high is because, first of all, we buy them at deeply discounted prices. So how do we find these deals? I mean, it's more important to buy the house right than it is to get your repair estimate exactly right. By the way, I want to make a big point and then I'll come back to how do you have 82,000 in profit. By the way, the point that I want to make just left my mind. I'm sure to come back in a second. So I'll give you an example of the 82,000. Oh, I was talking about buying them right. How do you find these deals? How do you find these off-market deals? Well, since I'm in such a small market, I want to dominate this small market. In other words, I want to be a big fish in a small bowl. And so we have multiple ways that we get seller leads coming into our pipeline every day. So how do we do it? Well, by the way, all the houses we're buying are directly from owners of houses. In our area, there's nothing in the multiple listing service whatsoever. There's no inventory. Hey, look, we just put a house on the market today, 3 weeks ago, and we put it on the market at $239,900. By Sunday afternoon, in 48 hours, we'd had 22 showings. 22 showings on that one house. And of course, we went under contract and it was all cash and we've already cashed out. But we have multiple funnels coming in. Well, what are these funnels? I want to be a big fish in a small pond. First of all, Google pay per lead. Google pay per lead. So I've got three different companies, not Google pay per click. Pay per click is if you're doing it yourself and you're doing your own bidding. But on pay per lead, we got three different companies that are providing us the leads. And those are our most qualified leads because they've gone to Google and they are searching. So Google pay per lead, direct mail campaign, we track and direct mail every foreclosure in our area. I have a full-time outbound caller, 40 hours a week, outbound calling tired landlords, tax delinquents, out-of-state absentee owners, etc. So how do you get the $82,000 profit? You got to buy it right. Well, how are you going to buy it right? You're going to find these people that are distressed, either with the property or with their own personal life situation. And so it's first of all very important to have the private money lined up first, ready to go before you start making offers. So buy them right, be able to find these deals, and you got to be careful on the maximum allowable offer. So here's how I make my offers. I take the after repaired value, I'm talking about on a single family house. I take the after repaired value. If it's under $300,000, I multiply it times 70%. Then I subtract the estimated repairs, and then that equals my maximum allowable offer. Now, we're only going to use that formula when we're paying all cash. And by the way, I want to make sure everybody understands when the seller requires all cash, that's when you're going to use private money. And of course, that's in the majority of the cases. So how do you make $82,000 on Add Your Profit? Well, let me just give you an example. Right now at 1903 Arundel Street, we are almost finished with the renovation. By the way, you're not using private money just for renovation houses. It's when the seller requires all the cash, even if there are no renovations. So this house at 1903 Arundel Street, we just closed on it a few weeks ago, started the rehab immediately afterwards. And here are the numbers. The after repaired value is $550,000, and I think that's conservative. I think it's going to be more like 575,000. And by the way, we live here in an area that's near the water or on the water, so that's why we have a median price range, not even on the water, of like 350 now. So the after repaired value is 550,000 on this house. The rehab is approximately $60,000, and then guess what I bought it for? 325. So if you take 325 and you add the rehab to it, then that is what, 60, 385, rounded on up to, to 400. Well, 400 to 550, that's 150, but realtor fees, I pay 5%. That's going to be about $27,000 coming off of that. So you can see this is an example of what we're doing right now that's well exceeding $82,000. So the short answer is, how do you make that? You got to have the private money ready to go so you're able to negotiate. Here's one way we got our offer accepted by using private money. We told the seller that, and the seller didn't have anywhere to go. We told the seller, tell me how much longer you need to stay in the house, and I'll go ahead and close right now, 7 days from now, all cash. You can get half of your money now at closing, and you can get the other half when you have vacated the property. And so she took the offer. So if I hadn't had the money ready to go, I could have missed out on it. And what sealed the deal is being able to close right now. Let me tell you something. Here's a writer downer, folks. Time kills deals. The more time that goes by between you talking with someone you're going to do business with and actually closing the deal, the less likely you're going to be doing business.
Jay, this is a little off topic, but you had mentioned that you're on the water. So are there houses on the water for 500,000?
No, I'm saying our community, our town.
Okay. All right. Town. I'm moving to the Carolinas.
No, anything like we're here at Bogue Sound, we're here at Atlantic Beach, North Carolina, Emerald Isle, Fort Macon. A home that is just a fair home, not fantastic, on Bogue Sound is over $1 million.
Okay. That
And
sounds
anything on the beach is at least 3 million now. I don't care if it's a small rectangle standing up like a tower. You know,
gotcha.
Jay, how long do these deals take to kind of turn around? And what would be kind of an investor's expectation on an annual basis?
yeah, that's a great question. So it depends on your market and it depends on your relationships with your general contractors. Now, I do business with two different general contractors. Each of those can do multiple houses. We typically have about 10 houses going simultaneously at any time. And I've got my own crew as well, got my own project manager. So we got a lot moving on. But how long does it take? Well, 1903 Arundel Street. Let's talk about that. Um, let's see here. We're right now on about week 8. I got 2 more to go. So 10 weeks from start to finish of that rehab. I'd only owned it for a month. So let's call it, let's say, 4 months. So 4 months from purchase until we start, until we finish. So in this market, you can be in and out in 6 months or less for sure. Now, transparency here, let's take the veil off. When you're doing 10 projects, you might have a house sitting out there for 3 months before your contractor can get to it. So, this 1903, we were able to start right away. I've had some houses had to sit out there for 6 months because we had so much going on before we could start. So in that case, it was 12 months before I was in and I was out. But listen, I'm so glad you asked this question because you just triggered me to tell you this. Private money is the best way to fix your cash flow. So you might have been thinking, wait a minute, Jay, if I got a house sitting out there for 6 months or 3 months and I hadn't even started working on it, how about these carrying cost bills that I got to be
Yeah.
paying? That's eating up my cash flow, Jay. And I ain't got that kind of cash flow for something to sit out there. And how do you fix that, Jay? Well, here's the fix on my lands. This is the part I'm so excited about. My favorite reason for using private money, and the list is long. I got 15 reasons I love private money. But the big reason is I receive multiple checks on every deal that I do. We get a check when we buy on my lands. When we buy a property, we always bring home a check and never take any of our own money to the closing table. My real estate attorney, when we close on a deal, I love my favorite phrase on her check stub that I pick up is excess cash to close. And let me tell you, I love me some excess cash. So all the time, we bring home $40,000, $50,000, $60,000, $70,000 from the closing when we purchase. So I get all my rehab money up front from the private lender. So I got all my rehab money up front and typically some other money to help with marketing expenses or carrying costs. So listen, here's my question. Whose money are you using to make initial monthly payments? If there are monthly payments, we structure deals to where you just accrue the interest and there are no monthly payments. Talk about fixing your cash flow in that scenario. But even if there are monthly payments and utility bills and the water bill, well, if you brought home a 50 or 60 or $70,000 check when you bought the property and didn't take any of your own money to the closing, have you got to worry about anything on cash flow when it comes to your carrying costs? Of course not. That's one reason I love private money. The private lender's funding it, and I'm using the private lender's money to cash flow my initial carrying costs, even their own payments. How about using somebody else's money to pay them their money? I love it.
Jay, what are some of the way you're presenting it to a private lender, what sort of return, what are kind of the terms of these notes?
Yes, very, very important. So when we talk about the terms of the notes, you see, this is where we would have taught the private lending program. We would have taught the terms, all right? We would have taught the terms of all of our deals, regardless of the deal. That's why you don't have to bring up a deal in that initial conversation because all the terms are the same, regardless of the deal. So we teach the terms. So what do the terms look like? Well, here we go. Number one, the length of the note is going to be 2 years. 2 years.
Oh.
But here's the deal. The private lender could really care less because they don't want the money back. I mean, when I've got a new private lender and I call them up and I say, hey, look, we are selling 1903 Arundel Street, 4500 Highway 24, 123 Paradise Circle, whatever it is. I got all these projects going on in my mind. So I'm calling them up and say, look, we're selling this house and we're going to be cashing out. So you're going to have your $100,000 note that you loaned to us. We're going to cash you out. We're going to pay you off along with any unpaid accrued interest. And Cameron, if he's first time being my private lender, Cameron's going to say, oh, no. Can't you just keep the money? No, I cannot keep the money because we're not borrowing unsecured funds. All the funds we're borrowing are secured. So it's a 2-year note. Mm-hmm. The maximum loan to value is 75% of the after repaired value. Now, let's clear the mud right now. If anybody has started thinking about this, you may have the question come up in your mind and you say, Jay, how are you going to bring home a $50,000 or $60,000 check when you buy, but you're not going to borrow more than 75% of the after repaired value? There's the answer. I'm not borrowing 75% of the purchase price. I'm borrowing 75% of the after repaired value, you see. So let's go back to the example we did a few minutes ago with Cameron being my private lender. I called up Cameron with the good news phone call. I said, Cameron, I can put your money to work. I got a house in Newport with an after repaired value of $200,000. The funding required is $150,000. There's the 75%. Mm-hmm. We'll borrow up to 75% of the after repaired value. But in that same example, that after repaired value house, I'm buying it for $100,000. Okay, 50% of the after repaired value. So you see, that's how I'm able to bring home a $50,000 check when I buy this house. It's worth $200 after repaired. I'm borrowing $150. So when my private lender wires that $150,000 into my real estate attorney's trust account, that's $50,000 more than I'm buying it for to pay off the seller at $100. That's how I'm able to bring home $50. So back to the terms. 2-year note, not going to borrow more than 75% of the after repaired value. The private lender is going to be named, and they're getting a mortgage or deed of trust, of course, not borrowing unsecured. Mm-hmm. They are going to get the insurance policy. They're going to be named as the mortgagee. So that's a layer of protection. So in case there's any kind of claim against that policy, the private lender is protected as well. They're going to be named on the title policy as an additional insured in case there's any issues down the road. We're also going to give in the promissory note our private lender what's called a 90-day call option. A 90-day call option. What that means is for any reason the private lender needs their money back in case of an emergency, then all they got to do is give us a 90-day notice, and we will replace their private lender note with another private lender. In fact, what I'll probably do is just sell the note, because I can take that private lender's note and sell it to another one of my private lenders. It accomplishes the same thing. Now, I will tell you in the real world, and by the way, the private lenders absolutely love that because they know in case of an emergency, they can get their money out, just like putting your money in a certificate of deposit at the bank. You can pull that money out early, but guess what? There's always a penalty for drawing the money out early at the bank. Well, a lot of people that do private lending charge a 5% penalty if the lender pulls it out early, but not me and not you. We're not going to charge our private lenders any kind of penalty if they need their money back early. We want to make it easy to do business with. And by the way, we want them to come back to us after they get past their emergency. By the way, In all these years since 2009 of borrowing private money, I've only had two private lenders take advantage of the 90-day call option. Both of them were small, $30,000 notes, and it was due to medical situation. They needed the money. So in reality, the likelihood of somebody calling it due early is slim to none. So here's why I tell people that get my book and read my program. I say, remember, it's your program. My advice is just duplicate my program and the terms that I do with my private lenders, but you don't have to offer a 90-day call option if you don't want to. Remember, here's what makes the difference in this world of private money. We are making the rules, not the bank, not the lender. It's our program. And by the way, the program is non-negotiable. I pay a straight 8%. I've been paying 8% ever since 2009, when you could go to the local bank and the average CD was 0.17%. I still pay 8% today with no points, no fees, no extension fees. And you say, well, Jay, you can go down to the bank now and get a 7-month or 8 or 9-month CD for 5.5%. Why haven't you raised your rates that you pay to your private lenders? Two reasons. Number one, I make the rules, not the lender. Number two, 8% is a whole lot more than 5.5%.
Well, now, so Jay, this is some great information. So I know you have a book out,
Yes.
and that there's an offer where you're going to let our listeners know how they can get it for free. So Jay, tell us, let's take a little time. How do you help people? Like when
Yeah,
you're teaching this, like how do you do that?
well, that's my passion now. I mean, we
Hmm.
still do a lot of house deals, but I only am able to make an impact on so many people. Now when you're a real estate investor, you're making a big impact. You're helping people. I mean, you got your general contractors, you got your subs, you've got your realtor, you got your real estate attorney, you got you got the people that are buying the house. So you're impacting some lives. But in 2011, Anthony, Carol Joy and I started up the Connor Marketing Group in 2011 to where I could educate other real estate investors on how to do private money the way I do it. And the reason I was drawn to do that is because I kept hearing stories and stories from so many other real estate investors that it was the money. It was the money that held them back from being able to do the business. I mean, there's really two main questions. Where do I find the deals and how do I fund them? And so I had discovered a way due to, due to the bank and the global world, what was going on. I discovered a way that was make it so easy to have all the money you would want to fund your real estate deals. And by the way, this private money works for commercial. We just structure it differently than single family houses. And so in 2011, Carol Joy and we started up the Connor Marketing Group. And in March of 2011, we put on our first live event teaching private money. That was down in Atlanta, Georgia. And wow, 2011, since that time, we've had thousands and thousands of students that have come into our training and our coaching on private money. We put on 3 live events a year. For one thing we do, I've got a Private Money Academy membership where people can be in on 2 live Zoom calls a month, to where you can ask any questions about private money. But then, in addition to all that, as you mentioned, I wrote a book recently. It's called Where to Get the Money Now. Where to Get the Money Now. Subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. This is not an ebook. You cannot download it. We actually will priority mail it to you. It's $20 on Amazon. On this show, you get it for free. Just cover shipping. And I'll autograph it and I'll priority mail it to you. And here's how you can pick up this book, Where to Get the Money Now. Go on over to www.jayconner.com/book. That's jayconner.com/book. We'll rush it right on out to you. It'll hold your hand step by step, super easy to read. how you can get all the private money easily and quickly, just like I do.
So we're going to put that link in the show notes, Jay. And you also have a podcast. So what's the name of your podcast?
Yes, I would love for everyone to come over and check out my podcast. It's on Spotify, iTunes, and all the other 1,000, whatever your favorite podcast platform is, we're there. But the name of the podcast is Raising Private Money. Imagine that. With Jay Conner. Just type in Raising Private Money, and you'll see a little black and green house. And we go live every afternoon on Wednesdays, and we release every one of our episodes early Tuesday mornings, early Thursday mornings. And we have amazing guests. I'm interviewing people on there all the time about how they've raised private money. And so we're almost up to about episode number 700. So come along on the journey, and we have a good time on there.
Jay, thanks so much. We'll make sure we get those links in the show notes. And again, man, really appreciate you coming on today. Thank you.
Cameron, Anthony, thank you so much for having me. It's been a great time. I really appreciate it, and God bless you.
God bless you, and go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.